Testing 1, 2, 3, 4. Okay, we have sound. Do I have video, guys? Anybody? I think I do. I'm getting better at seeing whether Zoom is working or not. Cool, thank you. It's early. We're not quite ready to start yet. About 5 more minutes. I'm just opening the room up and getting stuff together. And if anything interesting happens, I will talk about it between now and the start. Let's see, I want to show you that. I want to show you that. Why is this here? Well, let's see. Hey, can you guys see that? I think I got the notifications in Zoom both cooperating. That should be visible. That's a Journalytics notification. Cool. All righty then. Today could be interesting, guys. The bias is nicely up here, but it doesn't seem to have a ridiculous amount of energy behind it. So will be worth watching. And actually gold and oil are both in play too. Oil's still working a range. Gold may have broken out. It's out of the teens and seems to be holding here. So that could be an interesting one too. This is gold. Yeah, that's a pretty strong trend. It certainly looks like it could consolidate, but I wouldn't try to short it yet. Anyway, I'm just babbling until 5:30, so if you just got here, I'm not saying anything important. Hope everybody had a good new year. I didn't do anything and it was wonderful. Funny how things change as you age. I used to like worry about not having anything to do on New Year's. Now I look forward to not having anything to do on New Year's. Okay, we're going to start in about 4 minutes in earnest. Just for fun. This is pretty cool. I'm just looking at my resources. So my CPU is less than 25%. This is with a bunch of crap running in Zoom and a whole bunch of footprint charts. And so I'm pretty happy with that. The new computer is doing its job. One thing I noticed about the footprints in MZPack, this is an example of one here, is if you don't set them up to be really lean, they can crush your CPU. I mean, this machine is one notch off of about the fastest thing you can get today, and I can make it crawl if I give it enough to do it once. So that's always something to keep in mind. If you're just joining us, I'm just blabbing about some stuff until we actually start in about 3 minutes. Get your coffee, get woken up. We're going to be talking to this document that I just posted in the Slack. Oh, I've got a little alert coming from MZ Pack that I just heard. I have no idea what instrument it's talking about, though. I guess it's got audible alerts turned on here somewhere. Imbalance support zone. It must be this one over here. So MZ Pack is talking to me. It's telling me there's an imbalance support zone, which is kind of interesting. I don't think I like those little notifications, but I don't know if I can turn them off completely all at once or have to do it study by study, probably study by study. Yeah, here they are. So which one was that? Oh, it's this. That's what it is. Okay. All right. Well, we'll come back and mess with that later. All righty, guys. We're going to start in about 2 minutes. Thank you, Pavel. Happy 2020 to everybody as well. This may be the last session we have in this workshop live. I may try to squeeze in another just impromptu one or two, but we're reaching the end of the line. What we're going to talk about today is probably the most important conversation you can have with yourself. And it requires brutal honesty, like most things in trading, but this particular topic more so than ever. Just because you can know what you're doing, but if you make mistakes at this kind of stage, you can discourage yourself or outright fail. So really, really important to keep your head. All right, we will start in 1 minute. If you have to go get coffee or go to the bathroom or do anything like that, this is a good time. I am going to refill my coffee and be back in 1. Okay. It is 5:30, so we are going to start. Boy, I'm disappointed only 8 people showed up for this session. And I see a few of the ones that I think should be here, but the vast majority of people that should be here are not. And yeah, they'll get the recording, but they're going to miss the opportunity to talk to me on this subject. And that's too bad. That's really too bad, because this is such a critical subject. All right, well, they're lost. Let's get started. So I want to just throw up some visual aids. Let's start with this. I apologize, the spacing got messed up when I PDF'd it. I'm not sure why, but you get the idea. Okay, a couple of things I want to start with. You absolutely, positively, guys, have to take what I'm saying today and every element of it seriously. Because if I would just go back and look at traders that I've talked to, worked with, not worked with, but followed, and this is over a long, long time. I mean, 40 plus years, right? There's certain things I just see over and over again. And, you've been hearing this from me since day one, but if you don't have process and consistency, and process creates consistency, then it's just never going to work. I promise you that. A lot of people look at this and say, oh yeah, I do that in my head. And no, you don't. You really need to put this on paper and follow it. And, the more disciplined you are, the more you have to do that. I guess the most important example I can think of about this point number one here is if you compare what you're doing as a trader to having a job. A job is a very structured thing. You know, you work for someone else, they set the rules, where you're supposed to be, when you're supposed to be there, all that. When you're trading for yourself, you don't have any of that. And trust me, even if you're the most disciplined procedural person on the planet like me, you can still deviate from that all the time, and it will crush you when you do. So, you know, I don't know any other way to harp on it more other than to just keep harping on it. You absolutely positively have to have processes for everything. And, you know, I can give you some more examples of that, but here's just some really simple ones. Here's my calendar today. Okay, up, functional, and walk. We did that, so that's done. We are now doing baby account management. And what I've done here is I've kind of given you an example of what you should be doing with your day. When you get to 6:15, 6:30, you know, or whatever it is your time, the only thing you should be thinking about is the Open 5A and any tools that support that. And likewise, you know, for the first hour, this is a basic 3 setup structure to trading the day and only doing it an hour at the open, an hour at the close. And if I were you and you were new, this is what I would do. And I would schedule it like this. And I would stick to it as like you have a job. If you don't show up, you're going to get in trouble. Remember the general manager conversation. Somebody has to supervise you. You will not do it well enough yourself. And even if it's you supervising you, you have to divide those two roles, or you're just going to make mistakes. I promise you, it just is the way it is. And it's not that you're failing. It's just that's the structure of this business. All right. Second, you absolutely positively have to simplify your decision structure. And there's a lot of ways to do that. But for example, you know, having the screen like I do might not be good for you if you're just getting started. This is a lot of stuff to see at once. And, you know, if you, particularly if you have a footprint up there as well, what I would suggest you do, I've made a couple of different workspaces both in Ninja and in Daytrader, but I have one in Daytrader. I'm not going to bother opening it right now because it'll take too long, but I have a bunch of them, and one of them is index only. And the idea being, you know, if I'm only going to trade the indexes, then I don't need all this here. And of course I could just close it, but having a workspace that's specifically set up for that is a good idea. So, you know, while I encourage you to kind of duplicate the tools I'm showing you and my approach, you know, because I'm trading a lot of markets, even for me doing the little tiny account, I tend to think it's really important to drill in on the indexes and the correlated markets at the open 5. And the only real trades in gold and oil that I would play are momentum. And, you know, you can see those happen on the domes. So that's why I keep them here. But for a newer trader, that might be too distracting and you might want to simplify that. So when in doubt, for, you know, for growing your account and getting started, your default behavior has to be real easy, simple, simplify, remove. Those are the keywords you have to focus on. Adding more tools will not make you a better trader. It will make you a worse trader. So for example, right now, you know, you see me working on these footprints. I've, you know, been pretty public about what I'm doing, and it's revisiting an old tool that I used to use in a new platform that can take advantage of it better. So yeah, that's another piece that I'm going to come back to, that you constantly need to be developing yourself. But just because this is out there doesn't mean you should go get it. And a lot of you think that way. Remember what we said when we talked about setups. The only thing that a chart does, any chart, is support a setup and give you information about that setup. So don't add stuff just to add it. Remove stuff unless it supports a specific setup that you're trading. And so, for example, the footprints are doing that for me with edges and ledges. They're really good at that. And I'll talk more about that down the road if you continue with the Motley Crew group. But other than that, there's not a lot of value for me in this tool at the moment. I get everything I need from the other approaches that I've shown you. But, you know, as the tools get better and as my skills kind of focus, one of the things I said when I posted this is I'm still trying to get to the point where I can have literally everything I do on one chart. And I'm kind of getting there. You can see if I zoom back far enough, you know, I've got my opening ranges and some other stuff. but it's not there yet. It's a, a new tool, new implementation in Windows 10 and in Ninja 8 and the MZ footprint that I'm playing around with. So I hope you understand that point. Just because you see me doing something like this doesn't mean it's something you have to do as a new trader. This is really about number 10 is what I'm talking about. I'm at that stage where I'm never finished. And somebody mentioned that when I posted this on Facebook. I think it was, let's see, who was it? I can't remember. Anyway, and that's that you really have to do that. And one way to do that, one way to be able to do that is to partner up with other people, kind of like we've done in this group. I will always be on the leading edge of that, and there are other people that will too. And that's a really good way to shorten your curve. But you have to constantly do that. Don't think that you're going to get your platform set and you're done, because the tools evolve and you need to evolve with them. So that's a second big point about that. Oh, good. I see a couple of other folks are rolling in now. Anyway, so back on this. And let me just go through all of these real fast. And then as we talk, I'll give you examples of them. Mention number one. I think this one we've pretty much beaten to death, but the psychology here is really critical. You can't kind of go in and experiment one trade at a time if you're trading a small account. Every one of your trades has to be a really good ace, king, well thought out, good roll of the dice. You just can't afford not to do that. And that's really hard to do when you're new. So, don't fight that. Simplify your structure, simplify your tools. Again, very, very critical, and try to just work a couple of times a day. I think too many traders, when they're just getting started, think they have to sit at their screens all day. And I think the opposite's true. If you take the approach that I showed you and kind of calendar, let's go ahead and get rid of this since we're doing it. So right now, my only thing I'm thinking about is, what kind of setup are we going to get at the open 5? The 5A part of it, and then as that transitions into the first hour high and low. So, for a new trader, that's a really good thing to just be thinking about right now. And, what does that mean? Well, yeah, I've shown you that before, but, a quick look, what's the ranges? We're back up at the highs again. Boy, that's a good opportunity for a ledge there, breakout, fade, short. So this is a good setup today. I wouldn't have any sort of bias looking at this. The minute chart doesn't give us anything different. And the footprint's kind of seeing, the back and fill as it works its way up. So if you kind of look at that going into the day, and you could do that for any instrument, let's see what's going on. Gold's been busy. So let's do that for gold. Again, pretty strong trend. The dips are getting bought. You can see there's a spring, there's a little baby up thrust that pulled back to support. So anyway, there's lots of opportunity out there today. I think we don't really need to look at charts on a day like this where the patterns on the domes are pretty clear. So if I just kind of clear them all, we're at highs, all-time highs on all the indexes across the board. The YM's a little bit behind, but not by much. So we're correlated. There it is. Boy, 0.5% heading up toward 1. That's pretty good correlation. By the way, I threw the micros on here because that's one consideration to think about if you're going to trade a tiny account, is to trade the micros instead. Let me just give you a quick example. Let's say, just for fun, we just shorted the NQ there, and you can see every $5 tick what our risk is. And, I'm not saying you should short here. I'm just showing you an example. So, that's what a standard contract looks like. If I was doing that with a micro, real quickly, just to give you a parallel example, let's put the micro NQ in here. And okay, so prices are the same, looks pretty much the same, right? Not exactly. If I put on that same trade, look at this, a tick is, 50 cents, $1. I can afford to do a lot more contracts. I can afford to learn. Okay, this is actually setting up with some imbalances over here. I'm getting an audio alert. So this is going on. These are all buy side imbalances on the NQ on a very fast 10 range chart. So if these fail, my short might actually be a good setup, but obviously it's really a long. So, with a micro, you could even play this by adding a few more and, seeing if you could scalp out of it that way. Not a great strategy, but it gives you more room to play around and fail. So that's kind of a quick philosophy about the micros. See, I'm trading 4 now, and I still don't have quite as big a increment per tick. So it just gives me more room to learn how to trade scale without risking a lot of money. So that's why I kind of threw it in at the last minute. If you noticed yesterday, I threw it on the agenda. All right, I renamed the session actually. You know, should I trade micros? That's what I was talking about. And you know, it's up to you. Okay, I'm getting another imbalance support zone alert in my ear. You're not hearing them, I don't think. Are you? Are you guys hearing those? Yes or no? If you guys, no, okay, yeah, I didn't think you did. Anyway, so these are little baby imbalances that I've got here in blue, and the ones on the south side are in pink. And you can see, you know, a strong move up, and there's a little bit of a conversation going on here, but it does tend to be on the buy side. So I'm probably on the wrong side of this little example trade I gave you. In fact, I'm pretty sure I am, but I just wanted to show you that the micros give you just a little more room to play that. And, you know, the downside is you pay some more commissions, but it's not a bad idea to think about that. You know, it's not a long-term strategy. It's a learning strategy. So anyway, let's flatten all that out. And you can see this is where Journalytics comes up and asks me if I want to journal it, and I can, you know, real quick. So I can just say, well, this is really just testing, and we're testing adding to a loser, and, you know, whatever. So we can see that trade lost $19. And, you know, I couldn't have even tried that with a one lot. You know, it just would have gone against me too fast. So just a philosophical thought to add to your decision process. All right, a couple of questions came up. Let me look at them. So let's see, Pavel Kujiri, quick question on the way to make the context in a process. We start with the context, which is largest time. Not exactly, Jerry. That's kind of the old school way to do it. My way to do that really goes back to this this thing that you've seen me say a few times. You know, what's the technical picture, the auction structure, and the order flow? For me, that's what context means. And I asked, you know, is there a trend day brewing? Is there a flip brewing? And the answer to both of those is yes. We could, you know, we're trend up. So there's my little reminder for the Open 5A focus. That's coming from my calendar right here. So again, if you set your little, even your little Google tools up properly, they can keep you focused on what you should be doing. So we're right here right now. We're looking at the Open 5A. We're not going to really pay attention to anything else. We're not going to fade it. We're going to go with it, but we're going to look for opportunities that it might be dying out. So that's what I mean when I say context. So, you know, pick an instrument. Let's just do it for oil real quick. You know, I always start with the range, and the idea is just to see, you know, where we are, you know, trend up, pull back, consolidation, you know, the same thing that's been going on forever here. I believe this is a short setup at extremes, and that's what I was talking about the other day. And I did, in fact, play that and made some money with it. So, you know, then the other thing I do is I just kind of zoom in, and, you know, on the short term, it's just, you know, drifting back and forth within this little consolidation pattern. So that's what I do. That's what context is for any instrument. It's just that and nothing more than that. Okay. Let's see, Dimitri, nope. I'm not sure what those were about. Okay, do we trade MNQ watching NQ? Yeah, you could do that. The problem with leaving the micro up is there is some arbitrage between the micros and the minis, and sometimes you'll find the prices won't quite match up. And like right now, it's doing that. It's off by a tick. And, you know, that can be dangerous for the little guys. The ARBs will do that, you know, the arbitrage traders. So, you know, you have to kind of experiment with that on your own. It's really just for learning. You know, I don't recommend that you stay there for any length of time in those micros. So, you know, hopefully that answers your question a little bit. Okay. All right. So let's kind of go back to to this piece here. All right, and this is what I was talking about, you know, with trading one lots can be harder than multiples because you really only get one entry. I mean, think about it. If you're trading the NQ and you do a one lot, you know, and you let it go against you 4 or 5 ticks, you know, you just lost 25 bucks. And, you know, in a $3,000 account, you can only afford to do that 4 or 5 times a day. And so you really want to try to trade less. Gosh, you know, I don't know how to emphasize it. This is harder than trading a bigger account. Cool, Dr. Shaw, that's the idea, which is, excuse me, which really, kind of goes into what I'm saying in point 4. That's a good segue. Small accounts are about survival. You know, don't, it may, you know, look, you see these guys in the Top Step forum, and, you know, you see them all over the internet. You know, oh, I made, you know, I have my $5,000 account. I made $3,000 today. And this has happened to some of you. I don't think Amy's here. She's traveling, but she had an experience like that, made like 10 grand in a month and thought, God, I'm going to make 6 figures next year. And that was the whole year right there, that 10 grand. And that's not uncommon. So, you know, if you're trading a small account, you really have to only focus on growing it. Little winners add up. You know, those picking up $20 bills adds up. If you go for big winners, or if you try to let your winners run, you will lose. I promise you. That's where that mentality just doesn't make sense for you. You can't let your winners run in a little account. You have to do the opposite. You have to protect your losses. The winners will take care of themselves, whether 10 bucks or 20 bucks or 100 bucks or 200 bucks, doesn't matter. It adds up. That's all that matters. And again, your goal in this account is number 9. You cannot trade for a living with a small account, and you cannot grow it fast enough. Is everybody listening? Your $5,000 account might become $10,000. It's still not enough. Your $10,000 account might become $50,000. It's still not enough. Is everybody hearing me? Okay. It's not enough until you're stable in 6 figures, because then you can try to make a nice living and you can afford to have some losers. So your business plan has to be about getting to that point. And there's a lot of ways to do that. You know, have other people's money account, make money in it, withdraw a little bit of time, put in your personal account, grow your personal account. That's one idea. Another way is just go for the other people's money account, scale it, you know, let the guys take their cut and stay there. You know, there's a good argument for doing that if you're skilled enough to do that. Go for the scaling, which brings up my next point. Number 8. Scaling is like starting all over again. You know, you can be a really skilled scalper with a 1 lot or with a 3 lot or with a 5 lot. Taking that to 10s and 15s is a completely different art. I mean, your mind has to shift. You don't immediately cut your losers short. You know, you go back and ask yourself, is the setup still working? Like you've heard me, in which case you add to it. But sometimes you're adding to a loser. So that's a bad habit if you're not good at managing all those different pieces at the same time, which is why I go back to number 2, simplify your structure. You're going to be making a lot of decisions. The more inputs to those decisions you have, Summer, are you here? Summer's not here, but Summer is the king of giving himself too many inputs to decision processes. This conversation's going on over in the emoji channel. And again, just picking on Summer in good faith, but you know, these are all really, really good questions, but you don't have a brain that's big enough or fast enough to think about all this while you're trading. You really have to narrow it down to a visual of a setup that takes those things into consideration. And over time that will make sense, but that's what I'm doing with this footprint chart. And I'm not going to explain what all these numbers on here mean, but they're relevant for the kind of trading that we do and the setups we do. They're very relevant. So, you know, a footprint is, again, another tool. It's a good tool. It's probably the best charting tool for trading going forward, but it also takes a lot of time to learn how to use it properly and how to not just configure it to show you what you want to see, which with footprints, I see people doing all the time. There's a million ways to configure one. And I guarantee you can find a footprint chart setup that supports your current opinion, which is why you don't want to dick around with them while you're trading. You want to get it set one way and leave it that way. And that's what I'm doing here. And my footprints are totally just to show me if I'm on the wrong side of the tape at inflection points, because that's something that I can read on the tape. But if I'm really not drilled in, it's hard to see. And the footprint tools consolidate it for me. Like it's building a little support level here in that indicator that's running on MZPAC. And we know that. I mean, I don't need that tool to see that. You know, if I just go back to the second chart, that we've used all along. I can see that behavior. It's consolidating right here, and there's a little up thrust right there. So this is not a short. This is a pullback long or a shorting the extremes type of setup. And again, you know, any one of the charts will support that same thesis. You know, boy, if we get through here, it could be, you know, all bets are off with a running long. And, you know, the market and the funds would love to see that. You know, what are we up now? We're up, NQ's up 50, 0.5%. They'd love to see us have a blowout update today so they could short into that, you know, in the next few weeks. So, you know, don't have any preconceived notions, follow the flow, minimize what you have to look at. Okay, so number 5, you know, you guys have heard this from me over and over again, but I don't think you really understand, you know, or understood coming into this what that really means. You're running a business and you have to look at the entire thing. You know, your tools, your revenue, your expenses, your general manager that keeps you on track, you know, your 1-year plan, 3-year plan, 5-year plan. How are you going to survive? How are you going to grow? Where are you going to get the money? Where's your office going to be? Are you going to work at home? Are you going to go to an office? I have a really good friend who bought a condo and then bought the condo, are you ready? Next door, so that he could have a life with his wife, but so that he could trade quiet and privately. And it just worked out to be the best way to do it. He has a really nice 3-bedroom and a really cool complex right on the beach with an awesome view. And then he bought the 1-bedroom next door to it. and that's his office. And it's a really clear boundary, but he can still, you know, trade in his underwear if he wants to. So, you know, this is really important that you build your own idea of what that looks like. And, you know, for some of you, that it may not be that easy to do yet because you just don't know enough. And, you know, that's where having a mentor can help you because, you know, I see these people, you know, sign up for our service and they give you trade calls. And, you know, one thing I really want to make clear about the Motley Crew, you know, what Lee and I are doing is we're not going to give you setups and we're not going to tell you, you know, the trade today is to go short here or go, you know, that's FURA bullshit. What we're going to do is we're going to teach you how to do all these things, how to build your business. That's what we both do, you know. I'm building tools right now that, you know, I just explained to you, like the footprints that are just ways of supplementing my existing setups, but I'm also coding, you know, little bots and algorithms in other platforms to deploy. And that's not so that I become an algo trader or an HFT. It's so that I can automate pieces of my process to make me better at them. I'm never going to be 100% automated. But what I will be able to do is, you know, if I'm seeing like an HMOMO, I can have a little HMOMO bot that executes that for me. And an ATM is just a real simple example of that. And I just put a long on here just for fun to see if we get a ledge breakout, and we'll put a tight target on it. Since we're right before the open, this trade will probably fill, but let's go for 3 ticks just instead. Remember, this is NQ, so anything more than a tick is profitable. And notice how, you know, I start with my stop way away. I wouldn't let it get down there. Where would I put it on this trade? That's the problem. Remember, I posted this thing a couple of weeks ago back here in the process, and this is really important. And I'm going to post an updated one of these. But, you know, once you know the setup you're looking for, the next question is the stop. So, you know, I'm looking for a ledge breakout here. And it's teasing me, but it's not doing it. You know, where would you stop here? That's a really tough one because it could pull back quite a ways and still have this setup. You know, just to tell you the reality of that trade, the right place for this stop is probably like down here, which makes it a really crappy setup to let the ATM manage, but you could manage it manually and do okay. So anyway. So, you know, this is the kind of condition, if I truly thought there was going to be a ledge, I'd add one to it there. And now I've got a really nice kind of way to take profits as it goes up. And some other little features here, limit to price and stop to price. If you have a stop and you want to just group them real quickly, I don't know if you've seen Jigsaw do this, but you just click that button and then click the price you want them on, and it does that. That's a good management tool. So anyway, I'll probably get hit here. I'm just showing you Jigsaw stuff more than anything else. You can do that with the limit prices up here too. You know, it works the same way. It's like if I wanted them both there or whatever. Okay, let's stop playing around with that and go back to our Genja. You can see that's how it comes up to let me journal it. I think that's a really cool Feature, added one, added to loser, testing, tick drill, done. That's how fast your journaling should be. You can always add notes later, but did everybody see that? That's the beauty of the Journalytics setup. It's just so tightly integrated that it's hard to find fault. Yes, it could be improved. Pete plans to improve it, but I think it's the best current solution out there among the trading platforms. Okay, let's see. Back to other stuff here. All right, forgive your mistakes. Number 6. Gosh, I wish I could give you a silver bullet on how to learn that. I mean, I still do this. I'll make a mistake and lose $200 in this little demo account that I'm creating for you guys, and I'll spend the rest of the day kicking myself in the teeth. I'm like, you idiot. You can't do that. You just have to move on. I wish I could teach you how to do that. I can give you techniques. I have a bunch of them, but it's just practice. If you beat yourself up doing this, you won't last a year. I mean, it's just too hard. Yeah, we all have to learn that, Pavel. I still have it after all these years. It's part of life. Now, the thing number 7, I really want to focus on, because I just gave you that story of the guy who bought a condo next door to his house, and that's just a simple one. But if the people around you are not supportive of your trading, and many times they won't be, that's okay. Don't let them get under your skin, but your life has to be constructed around your trading. This is not a side gig. You ever hear that? This is not a side gig. It's too hard. You're not going to make a few bucks trading, while you keep your day job. You can learn that way, and you might be able to make a few bucks if you get good at it and you find a setup that works in conjunction with your day job's hours and whatnot. I did that when I worked for Microsoft. I was a Microsoft corporate sales trainer in a very specialized little unit from 2008 to 2014. And I was based in Denver, and my boss, was 5,000 miles away. It was a great deal. It was fun. I got to put on lots of big training events for different resellers. So that was an example of having a job that allowed me to trade, because I didn't have to be at work till 11 o'clock Denver time, 11 in the morning, because I was working with retail people mostly and trading resellers, and, doing events at night at movie theaters, where we'd put on a big training event and have 500, Best Buy employees come in, and it was a blast. But the point is, I could trade around that because I had the mornings and I didn't have a lot of responsibilities in my job. I didn't have any direct reports. My manager left me alone because he knew if he bugged me, he'd get fired. In that environment, it was very easy to do that. But if you guys, those of you that still have, real jobs or whatnot, you really got to sit down and map this out and really understand, how the other people in your life are going to impact it. There are no halfway measures about this. That's just, there's no other way to put a finer point on that. Number 7. Embrace that, or find another business. Yeah, I will. With number 6, I'll do that more in the crew, because it just kind of comes up as it comes up. But one example I can give you for number 6 is just a life example. And remember I told you guys that I had a stroke when I was 27, and I was in the hospital for a month. And when I was discharged, I remember walking out of there and thinking, God, it was hard for me to imagine what could phase me going forward after experiencing that. And you know what, 10 years, 5 years later, things did phase me. And so going back and kind of remembering that mindset helps me a lot. So that's one simple example. But I'll give you another one, and it's number 9. Okay, this is the point for all of you, Dimitri, Pavel, everybody, Jiri. The problem is you guys are trying to do that too early. You're trying to go get other people's money when you're not skilled enough to do it. Yeah, you could pass a combine. Yeah, maybe you can make a few bucks. You're not going to make it in the long term because you don't have the procedures and processes and skill set. And that's that's the crux of Top Steps business is, getting people through that, and they get into, and they get funded, and then they get bumped out. And, the ones that are truly trading for a living are playing a very different, very long game. You don't see them posting about their $10,000 days, and you don't see them posting that they did the step one in one day. Those are all the people that are going to fail, you guys. The people that are successful are the ones that are not posting that bullshit and that are continually making themselves better. And all their interactions with the other traders in those kind of groups will be about them learning, not telling other people how to do it. And the only time you'll see them talking about telling other people not to do it is when they're trying to help people get on the right path. And that's really frustrating. You see, I constantly have to just walk away because, all they want to do is argue with you and tell you about their moving average crossover system. And, and some of you here are guilty of that. I opened up the workshop, and the first couple of sessions, a couple of people just wanted to tell me about their systems. And I'm like, if you're so goddamn good, what are you doing here? I mean, that was my reaction. That's why I just jumped so hard on those of you that did that. Is you're just not that good. You don't know what you're talking about. And my point is, I don't either, but I know more than you do. So it's really important to have that humility and that mindset. And that goes back to process too. Competent and humble, that's not a joke. I am certainly one of the smartest people I know, and that's a really dangerous opinion. It's true and it's dangerous. So I have to constantly tell myself, okay, you're going to think you're smarter than somebody right now. You're going to make a trading decision. It's going to be the wrong one. You're going to have to bail on that. And when you do that, there's that humility coming back. So there's another good example of that for you guys. For number 6 is to understand your humility and really, you are going to fuck up. Look, my average win rate across the last time I counted it, it was 27,000 trades since 2010. My win rate is 84%. That's awesome. However, that means 16% of the time I will go wrong and I will fail. If I do a few of those in a row, I could really lose a lot of money. So I have to just learn not to do that. And you have to constantly train yourself. I'm reading your comment. Let's see here. Yeah, I totally agree with that. Look, I think that every trader must blow up a couple of accounts before they truly get good. What that means is put $5,000 in a real futures account, trade it until it's gone, and then do it again. I don't think that experience is replaceable. If you ask successful, real full-time traders how many accounts they've blown up, the smallest number you will ever hear from somebody who is not lying is 2. If they tell you 0 or 1, they're lying. Seriously. I don't know a lot of traders that blew up one account and then were successful from that point going forward. I know some that lie about it because, it depends on how you count blowing up an account. Okay, here we go. That's why it's always at least 2, okay? An example of blowing up an account would be, a reset in Top Step. That's why I really like their $50,000. People say it's really not $50,000. It's really only $2,500. All right, bite me. The point is, if you trade $50,000 like we are trading this little $3,000 or $4,000 account, you will pass the combine, you will get funded, and you should be able to withdraw $1,000 a month. Is everybody listening? Yeah, I know you have, Jerry, and that's why you shouldn't be in a combine. But I do think you're on the right path. And I'm not picking on you. Greg's in one too, and he jumped the gun also. I mean, if you look at the people in combines, there's probably 20 people in here who are in step 1 or step 2 of their umpteenth combine and are probably too early. They should be practicing more and whatnot. But that's okay. That's okay. Again, it's the business plan. How are you trying to get it done? What is it you're trying to do? Does anybody want to take a guess how many accounts I've blown up? Where I wasn't trying to blow them up. I mean, sometimes I do that. If I'm truly testing live, I will frequently, spend a couple of $100, couple $1,000 because there's just no other way to get live properly. So, okay, 5 are good numbers. Yes, 5 is correct. 5 is how many accounts I've blown up, and that would be, I blew up my first one in like 1989 9, I think it was. You know, this was when I had to call my trades in and all that. It was, you know, before electronics. And then I blew up a couple around the 2000s, and haven't blown one up since. I've gone 50% in the hole in an account, and then, you know, finished the year profitably. But boy, was that an exercise in the one tick drill. Anyway, so, you know, so if you haven't even blown up one account yet, you know, cool, you've got a lot of learning curve, and you should be prepared. You know, the first time you open a real futures account, you send them your $5,000 or whatever, you know, it is, or your $2,000. Now that's a minimum in a lot of places. The day that that account is gone and you have to go tell your wife or your husband, you know, all right, I got to start over. That should be the best day of your trading education, not the worst. And that's what you need to embrace to successfully cover item number 6. Okay, now I want to spend just a minute on 8, 9, and 10, because really that's what it's about. You know, the rest of the things you just have to practice, but if you're going to make it long-term from your small account to, you know, any kind of trading for a living, you have to learn how to scale. You have to go get other people's money, and you have to constantly be evolving and working on your tools and processes. That's really the crux of this. Remember what I said, and you also heard Lee say it, about how every time I fail, every time I make a big mistake, my process approach is, for example, if it's in the top step, I reset it because I'm fining myself $99. That is Jeff's way of saying, okay, you made a mistake, here's your slap on the wrist, I can afford it, and move on. But it makes it tangible. It makes it, you know, okay, you're done, you penalize yourself, and now you can move on to the next step. So it's really important to be able to do that. And it's easier to do that with other people's money. You just have a lot more room to fail. So that's the argument for doing stuff like combines and getting a bigger account going. You know, for some of you, that could just be the 5-lot 50K account. That might be perfectly adequate to grow your personal account and, you know, make a living doing this if you keep your overhead low. And that's the last thing I want to say about small account psychology. You know, if you've got a wife and a mortgage and a whole lot of debt and whatnot, I don't know any other way to tell you this, but odds are not good that you're going to make it because your head's just too distracted. So, you know, the way to get around that is compartmentalization. And so, for example, let's say I'm just going to make up a hypothetical person, which is kind of a composite of 3 or 4 of you. Okay. So let's just, you know, here's our hypothetical person. You're 40 years old. You have a full-time job that pays pretty well, 6 figures. You hate your job, or you want to leave it. You know, you're at the point where you've been in it long enough that you could retire or start thinking about it. You know, you're a successful pharmacist with a pension, but you really don't want to be a pharmacist anymore. Any of those, you know, composite people, let's meld them all together there. So if that's you, break those things up. Is Josh here in this session? He's not. Well, when you listen to this, this applies to you. It applies to Greg, Maria, with the side stuff. It applies to you too. If you break your business plan down into chunks, so, okay, clear plan for your business, tools, revenue, expenses, contingencies. All right, let's just do like a little 1 year kind of out loud one of those for a new trader. Okay, so let's say 2020, you know, and this could be 20 or 30 of you guys right now. Your plan for this year should be the following. Number 1, I want to just constantly work on my process. Every day I'm going to get it simpler and more perfect, and so that it's like Jeff's, in the sense that, you know, every one of these, and you've seen this kind of over time, this means a lot more to me than it does to you. You know, this little gaps equals weight, F first hour high and low is greater than open 5. You guys understand that now, but you didn't 10 weeks ago. And it's a really critical point that has a lot of depth. And I could write 2 paragraphs about what it means, but I don't need to, because it's for me. It's my process. And you need to continue to do that too. And you need to do that all the time. Not once a month. It's a continual process. It iterates. You're doing it over and over and over and over. Okay. Now, back to this idea of a 1 year plan. So let's say you're, and again, this is our composite person, you have a real job, you have a real futures account, you got $5,000 you put in, and you know, maybe you're break even, maybe you're down a little bit, you're doing 1 tick drills, whatever. Okay, now what you need to do is you need to nail down your business right now. What is your plan for 2020? If you want to trade for a living after 2020, and I don't think there's anybody in this group that's going to make it this year to a 6-figure living. Maybe 1 or 2 of you have a shot if you really buckled down. And this is just, again, based on what I know about you. You know, there could be more of you there than I know. But anyway, all right. So if you're one of those persons, you know, you have a job, you don't have a job, you just lost your job, you have an hourly job, you have a 6-figure job, whatever. You have a stable life where you can pay your rent. Okay, that's critical. Then you have to compartmentalize. So then your year 1 plan has to be, okay, how can I do the absolute least I have to do to survive with my paying the rent while I really focus on teaching myself this profession of trading? So in order to do that, I need to get my setups down. I need to get my process down. I need to get my playbook down. Focus on 1 or 2 instruments, focus on 1 or 2 setups. End of conversation. Yes, I've shown you 8 of them. That's why I did this just the other day when I posted this. Get rid of stuff that doesn't matter now. It's just like your technical analysis background. It won't hurt you. You just don't want to think about it right now. It will come in useful later. But for right now, focus on 1 or 2 sets that can make you money consistently, that are easy to execute, and that tend to work right away or not. The Open 5A is a really good example of that. Spurs and thrusts is the other. HMOMO I look as, that's on here too, but HMOMO is just a gift. When you get an HMOMO like we had the other day, and you can just put trades on and they're instant profitable, just do that and don't think about it. Just do it, stops. That's all I can say about that. All right, so back to the 1-year plan idea. So your mission is to get your process tight while you practice and you get more and more skilled so that you can go out and get other people's money. And so in your 1 plan, I would be thinking, okay, I want to get my process, I want to get my playbook, I want to get my setup stable. Then I want to go over to a place like Top Step or 1UP or whoever, it doesn't matter, they're all roughly the same, contrary to what a lot of people will argue about. Pick one, I don't care. Go get in there, and your only objective is to get through that slow as possible. Notice how I did not say get through it as fast as possible. Jerry, notice how I did not say do step 1 and step 2 in 1 month. As slow as you can get through the process, because that way you will not make a catastrophic mistake. Think about it. You need to make $3,000 twice to get funded with a $50,000 account, the 5 lot. Not a bad place to start. What does it take to do that? A couple $100 a day is all it takes for 10 days. But those of you thinking, God, I'm going to make $1,000 a day, you're going to have too many losers, and you're going to hit the trailing loss drawdown, or you're going to hit the weekly loss limit, and you're going to get bumped. And I know this is exactly what happened to all of you. Yeah, I see the truths, and I get people private messaging me, yep, that's me. Okay, so stop doing that. I mean, you know, the definition of insanity, remember that one? That still applies, guys. I'm remaking this METC flow for you, by the way, but insanity check. Are you making the same mistakes expecting different results? Oh, this combine, you know, I'll be okay. No, this combine, you won't be okay. You need a better process. Then next combine, you will be okay. Do you understand me, guys? Yeah, you know what? It is really easy to consistently make $200. So stop trying to make 1,000. Stop trying to make 500. In the 50K combine, for one example, your goal should be 300 a day, 10 days to qualify. But if it takes you 20 or 30, fine. $50 a day is fine. Just don't lose money. It's that simple. I mean, it really is. If you have a day that's going badly and you have a couple of losers in a row, take the $100 drawdown and walk away. I just can't make that more clear. No large losers. You literally have 3 options. You have an option to make big winners, and you probably won't. Get used to that. You can make small winners. If you're good enough, you should be able to make them just over and over again. and they will add up. You've seen me do that. I mean, I've given you dozens, hundreds of examples of me doing that an hour at a time, a day at a time, 5 minutes at a time, 7 minutes at a time. That's how you approach that, guys. Get in there and scout, get a bunch of $20 winners, get your 200 bucks, shut your computer down and go to the office, or go help your wife clean the house, or whatever it is you have to do. Go take care of your babies, go walk your dogs. That's why it's so critical to have this kind of, see, I have literally everything I want to do in the open 5 here in a couple of minutes. And, that's not just one day. You should do that every day. Pick a day, like let's see, Monday, I'm driving a friend down to the airport. So, you can see that I've got that in, Cynthia's her name. You can see I've got that in there, but I'm going to try to catch the open 5 right before it. And that's it. I could make a nice profit that day, and then, drive her down the airport and then go get some cracked crab in Malibu on the way back. That's the way you need to think if you're going to do this for a living. Okay. You really do. Okay. Back to this guy. I'm getting these audio alerts in my ear and I'm trying to figure out I see what's causing them. All right, just give me 1 second, guys. This is part of my process development. I need to just write myself a note. I have a couple of things I have to clean up in my MZ pack stuff. These audible alerts it does could be useful, but in general, I don't like audible alerts like that price squawk guy, who, by the way, is a complete prick. If you need that software, I just warn you in advance. It's decent software, but don't even ask the guy for a help question. It's a total waste of time. Okay, so your business plan. Your 1-year plan should be to get funded and have a small personal account. And that's it. You're not going to be even consistently profitable. That's the 3-year plan, is to kind of grow that funded account so it in turn can grow your personal account and you can consistently remove money from the market. That I've told you over and over again is kind of the only reason I'm here. That's my goal in trading, is to consistently remove money from the markets one way or another. It doesn't really matter what the way is. So I want to pause there for a second. Does everybody get what I'm talking about for all of you? Again, I really don't think there's anybody in this group that's an exception, maybe 1 or 2. Your business plan for this year should be to stabilize your process, your playbook, and the setups entailed, the charts that support those, if any, because most of them can be done on the dome, or you should be heading that way. And then lastly, build up that other people's money so that you can divorce yourself from it. And then, think of it as if you have 2 hands, I can't show you this because I have my camera on, but if you have 2 hands, put both of your hands out with your palms facing up. And it's like, move one up a little bit, withdraw a little money, moves your funded account or your personal account up a little bit. Don't get into this, how much money can I make every month? That is not a concept that should be in your head the first year. Just think about it. If it's 2021, January 2nd, 2021, and you and I are having this conversation and you have a funded $50,000 account that you've made $4,000 in last year or $6,000 in, and you have a personal account with $9,000 in it, you have had a fucking phenomenal, awesome year, and you have succeeded at your 1-year plan. That is what you guys need to be thinking about. Then we should talk about your 3-year plan and scaling, because scaling is really hard. I just went through this. I told you in 2017 when I was playing around with order flow and trading 1 lots. And then I went back to my live account and started scaling it up. And it was like I was starting over. I mean, it's just a completely different mentality to scale than it is to trade a small account. You have just so much more room. But the problem is when you're a rookie, that room will screw you. You will burn yourself. Whereas when you're a pro, you learn that room. Darren said a really good phrase. Your eyes get bigger than your stomach when your account's too small. But when it's big enough, they don't. You'll look at a trade and say, okay, that's a loser, but the range is still holding. And no, this is still a good idea. Adding into this makes sense. And you've seen me doing that. And, there's just no way you can do that in a small account and survive. It just won't work. I'll give you one example. So you're trading an NQ, you put 1 on, it's a bad entry, but not bad, horrible. It's 3 ticks, off where you should have gone in. So you put another 1 on. So now, you got a 2 lot on with an almost perfect entry. Okay. But it's $10 a tick now, guys. So where's the stop? With a $3,000 account, you can't afford to let it go against you by $300. because that's 10% of your cash. 10 days of that and you're gone. That's how you blow an account up. So you just can't do that. You got to just put the one on with the idea that it's ace king and it's going to work or not, and you got to just be relentless at taking losses. You know, in a baby account, it's not uncommon to see just one after the other, 1 and 2 tick losses, and then a lot of, you know, 2, 3 tick gains. You know, it adds up. I just can't emphasize that enough. All right, I don't want to go into the open with this session. It was just kind of an overview and a big picture idea of how to kind of set yourself up to succeed this year, because I know a lot of you struggle with this. And, you know, I'm going to emphasize one thing about this as I wrap up. The most important thing on this entire page is item number 6, and many of you caught that. If you don't learn how to forgive yourself and learn from your mistakes and learn how to learn, which some of you are not good at and some of you are really good at, I'll give you a few different examples. You know, observe Darren, observe Steve, observe Alessandro, observe Ferv. You know, these are guys that are putting their stuff out there and posting their losses and saying, yeah, but I got back to break even. And Amy, another good example. Maria, another good example. You know, you guys are learning how to do this. It's not something that's just going to happen. You're not going to get good at forgiving yourself. It just takes practice. If you have a supportive other, you know, partner, friend, wife, husband, you know, that helps a lot, but don't expect it. You know, they just don't get this world, and they probably won't ever, which is why trading partners and Motley Crews are useful. You know, it's just people to talk to. And that'll be a cool thing about the Motley Crew, is that it'll be a small enough group where when we have sessions like this, it won't just be me talking or Lee talking. You know, we will do some of those that'll be much more structured and educational, but more likely what we're going to do, you know, is have sessions where we'll just open it up and let people talk, and, you know, that'll be fun. All right, with that, I'm going to open it for 2 minutes of questions, and then I'm going to wrap it because I want to trade the open today. Post your questions if you have them. Now I'm going to go back also and revisit my context. Notice how we pulled back off of that ledge. So, you know, these are the 4 indexes. Remember, RTY and NQ tend to lead. And right now, I mean, the patterns are almost mirror perfect. We have literally almost perfect correlation. So I would say this is a perfect day to have absolutely no bias. You know, my kind of breaking out the long bias that I had earlier is gone. I don't think that's the case anymore. You know, it got sold up here, so I think we could get a nice range day today. Watch those top and bottom numbers. You know, watch 40, 68, maybe 92 down here. Those are some remember what I said when I in my process I look for extremes? That's what those are. So that's the you know, extreme boundary prices. That's what I was just doing. I'm just looking for, wow, if it got way down here, that would be a real interesting long. Or if it got way up there, that would be a real interesting short. But in the middle, you know, stay out of the middle, right? I've heard that before. All right. Any questions before I close this out? Happy 2020, everybody. I do not see any questions. I see a lot of totally understood, agree. Cool. All right. Have a great year, everyone. If I do not talk to you again, please join us in the Motley Crew. If you're at all able to do so, you're all welcome. And I'm really excited about what we're going to be able to accomplish there. Understand, it will not be a furu group. We're not going to give you, you know, we're not going to make calls. We're not going to say, you know, the oils are short today. We are going to teach you trading techniques, and we are going to compare notes with other intelligent individuals. That is what we are going to do. Lee is going to share, you know, he's going to use terms like absorption and imbalances and unfinished auctions, and I'm going to let him, because there is a lot to learn there. It's just, don't get caught in the nonsense. All material is nonsense until you can integrate it into your process and your setup. That is what the definition of nonsense is. You've heard me use it throughout the session, throughout all the sessions. There's a lot of great information, but until you can put it into context, it remains nonsense. Yes, Jerry. In fact, Lee is already automating some stuff, and I am too. There's some really cool little you know, there's little bots you can make. Like, you know, you can make an HMOMO bot pretty easily. I mean, the ATM I showed you is basically one of those. You know, you get the trade on and you can kind of let it manage itself. I don't like to use trailing stops for a lot of reasons I won't go into, but I use limits and I move them myself. You've seen me do that. All right, guys, I want to catch the open. We're going to wrap it here. Have a great day. I will talk to you in the Slack, if not elsewhere. Happy 2020. It has truly been my pleasure and my privilege to conduct this workshop. Thank you all.